Do you need money to buy a home with a VA loan? How do you improve your credit score fast? Can pigs fly? These questions will be answered today. Hey guys, President of XP Realty, part of the Johnson Group here in beautiful Savannah, Georgia. And today we're going to be doing Ask a Lender. So we got Christina Boyette from New American Funding.
Hey!
And she's going to be answering 5 questions that are common for home buyers in the market. So let's just get into the questions, okay?
Oh, yeah.
All right. So a lot of times, I was in the Army for a long time, and we got a lot of what we call barracks lawyers out there that kind of tell everybody, oh, it doesn't cost any money to buy a home with a VA loan. So, Christina, do you need money to buy a home with a VA loan?
You do. Yes, that's a good question. I get that frequently. It's a lot of VA clients, they think that they can either roll in the closing costs in the loan or they don't have to pay them at all. But that's not the case. You are responsible for the closing costs. Now, you can ask the seller to pay for it. Mm-hmm. They can pay up to 4% of your closing costs.
Okay.
But, that's only if the seller is willing to pay for it. So if he's not willing to pay for it, you have to pay for it. So you want to save a little bit of money. You also have to have some money for earnest money. That is an upfront fee that you will collect.
Well, and typically the earnest money, and if you watch my other videos, it's 1% typically in this market, and especially as the market heats up, and we'll talk about credit here and the interest rates a little bit later, but. Yeah. As the market starts to heat up, like you're not going to have as much negotiating room as you would before. Because when I first came in, like asking for closing costs was the norm. You know what I'm saying?
Yeah, that's very true. And I'm still seeing some contracts with seller paying some of the closing costs, but that's only going to last maybe another month or two.
Right now,
yeah,
you can ask for closing costs, no problem. But when the interest rates lower and all the buyers come back into the market, asking and negotiating is going to be tough.
Very tough.
And I mean, these contracts, you come in and there's buyers that are putting in 5-6 contracts just try to get a home. And Christina's going to talk about a little bit of ways to make your offer stronger here shortly. But if you're going to buy a home with a VA loan, you definitely want to come in there with some cash in hand.
Right.
You know what I'm saying?
Exactly.
So, all right. Well, thank you. I appreciate that one.
That's a good one. Let's see what's next.
What's the next question? Okay, here we go. Should the home buyers wait till the interest rates come down to buy a home?
Absolutely not. Now is the time, because we talked about it. We can negotiate right now. The next few months, we still will be able to negotiate. But once those summertime comes, naturally, there's going to be more, buyers out there and not a lot of sellers. And then this year is the year that is predicted for those rates to come down. We've hit the ceiling of the rate, so rates should be coming down. Fed's already said they want to lower it by 75 basis points.
Oh.
So a good time for them to lower it is in May and June, because those are the time that they get the first quarter numbers of how the economy is doing. So that would be a good time. That would be May, maybe lowering the rate, June, maybe July. But once those rates come down, it's even more people than naturally in the summer they come. Because, they've been holding off. Lots of people have been holding off for those rates to come down. So now is the time to buy.
Yeah, the spring market is coming. And once the spring market comes, you're going to get more sellers, naturally. But historically, we are at a low of listings. If you've watched some of it, we are way depressed on listings. Now, as interest rates go down and sellers look to move up, well, then it's going to free up some stuff. But you got to think, interest rates have been in the 7s for how long now? A year?
Yeah.
In the year, maybe a little bit more.
A little bit.
So once they go, it's in the 5s, it's going to be a madhouse.
It's going to be a madhouse. So now's the time to buy.
They're going to, these extra buyers coming to the market are going to drive the prices up. There's going to be bidding wars again. And if you don't want to get in that mess, get your home now, because you can refinance. Like,
yes.
When is the earliest you could refinance?
Well, I would say you need to wait the 6 months.
Okay.
And then after the 6 months, you would want to really wait till you're at least 1% lower in rate. Okay. Some people even want 2%. So those are kind of things that you'll look forward to, is you'll always be able to refinance. So buy now, get the home you want.
For the price you want.
For the price you want, and bite the bullet now, and then refinance later. So you're not going to have that higher payment forever. It's just, for now.
And then oftentimes when you are out there bidding on a home and losing, and bidding on a home and losing, you're just going to get frustrated, and it's just not worth it. I say buy now before everybody else comes in the market, and then when it's time to refinance, you have control over the refinancing, but you don't have control over the prices if you try to buy when everybody else is in the market. So I think that's a good idea. Just buy now. Just get it over with. Yeah. Get in the home. Stop renting, because that's 100% interest. And just waiting is going to kill you when it comes to price on a home. So I think that's a good idea. We should be waiting to buy a home.
No.
How, if they are going to put an offer on a home and buy a house now, what would you suggest they do to make their offer stronger?
Well, one way that a lender can help you out to make your offer stronger, because, realtors know how to make it stronger on their end, but on our end, what we can do is send your file to an underwriter. An underwriter will approve your loan. They will gather your documents like pay stubs, W-2s, bank statements, and then we'll send it to an underwriter for approval. Most people will only have a pre-approval letter from their loan officer, which is a big difference. So a loan officer, some don't even gather the documents. They just say they put in the data that you say that you make, how much you have in your account, and then run it through the system that all lenders have, that FHA and Fannie and VA have given us, and we run it through the system, and it tells us, yes, we can proceed, or no. And so they give the pre-approval letter. Some loan officers actually collect and look at the data, your documents, like I would do, and feel very confident on giving you that pre-approval letter. But you want to go to the next level and let the underwriter, who is the person that tells you yes or no if you can have the loan, review all the documents, all your pay stubs, your W-2s, the bank statements, go through the guidelines and give you that yes. So
Christina, what's the difference between a loan officer and an underwriter?
So the loan officer is not, if they give you a pre-approval letter and say, no problem, you've got this, they're not the ones that actually approve you. They just review on all their knowledge of what they have of the products and what documents you've given them, and they run it through that system that the VA and FHA and Fannie have given us. So we're pretty confident that you'll get the loan, but we're not the ones that say yes or no.
That's the underwriter.
Yes, okay. They're the ones that say that can approve you.
And if you've been through the buying process before and you heard the word underwriter, a lot of times it comes with a bad connotation. You know what I'm saying? Because the lender told me one thing, or the loan officer told me one thing, and then the underwriter's saying another thing. So it's important. Get with your lender as soon as possible to kind of work through these little kinks. With Christina's experience, she's going to be able to give you a good idea whether or not you're going to qualify or not.
Yes.
Barring some unforeseen thing that you can't see or something like that. But the underwriter is the ultimate authority on whether you get your loan. So, like I said, start the process as early as possible. I think I say this all the time. If you're thinking about buying in 3 to 6 months, you get with Christina now so that you can be not only improve your credit, but make sure that you have all the documents necessary so the underwriter can approve you. So what is the quickest way, now we're talking about credit score, what is the quickest way to raise your score if you're a buyer trying to get ready for the market?
That is a very good question. The quickest way, the best way that I can give you of advice is to pay all your revolving debt under 30% usage.
What's that?
What's big
revolving debt?
Thing. Revolving debt is like a credit card.
Okay.
It doesn't have a time to pay off. Don't worry about your car or loans that have a time to pay off. Paying those down does not help at all.
No.
You want to focus on your credit cards, especially since Christmas just happened.
Right.
So I know they're probably charged up, but you'll want to look at them and see what your high balance is and lower all of them to under 30%.
Now, so for instance, if you got a $10,000 limit on your card, it can't be over $3,000.
Correct.
And it doesn't matter if you have 10 cards. If they're all $10,000 balance, they need to all be below 30%, right?
Correct. So a lot of people think that, okay, I'm going to pay off this credit card first and then pay this credit card next. That does not give you the most bang for your buck. What you want to do is work on all of them under 30%. Now, you can pay them off if you want, but don't cancel the card. Don't cancel it. Just keep it open. You can pay it all the way down if you want, but the main thing is you want all of them under 30% usage.
Okay. And, a lot of people, if you check your credit report regularly, you will see that one of the negative factors are not enough time on your revolving debt, right? So the longer you have with this revolving debt, I have a star card from the military that I got when I was private. Okay.
Oh, wow.
And I have a zero balance. Obviously, I don't, but I never closed the account. That one is another Target one. Those are like 15, 20 years of credit history, and that really improves your score. So if you have a star card and you're frustrated, or you have a credit card that you're frustrated, you're like, I just want to get rid of it, and you want to be happy and be done with it, well, just pay it off and don't shut it down, because you're not going to have to pay for it once it's paid off.
Right.
Unless there's like an annual fee or something like that on your credit card, then maybe you want to think about other ways of doing that. But yeah, don't close down any accounts, because if the longer credit history you have, the better off you are. Okay. Well, I hear horror stories. Okay, from loans being sold to other banks or something like that. Like if I get a home loan, then it was I don't know, USAA, and now it's PennyMac, or it's something else and it's been sold. Is that true? Is that what happens?
It is. It's so common. Most lenders do sell it in the first month or 2 or 3. You will see your loan, being sold, and it could be sold multiple times. There's even a lender called Mr. Cooper. I mean, that's what my got sold to, and you have no control over that. And some lenders are good, and some are not. And so this is one of the biggest debt that you have.
Right.
And so if something goes wrong, this is your house. You want to be able to contact your lender and talk to them. This is very important. And so New American Funding, we do not sell your loans. We're going to keep your loan. You're very important to us. You're our client for life. And so,
and mine.
Yes, right. We don't. You're not just a transaction, just closing your loan. It's much more. We're going to have you for 30 years, maybe.
Right.
So I'm local. You can contact me. I'm going to help you through any questions that you have, any problems. And so you want to make sure you have a lender that is going to keep your loan. That's going to be the best.
Right, and not only that. I mean, sometimes local lenders, it makes a difference, because all the real estate agents, they know who is local in the market as far as lenders are concerned, right? And if I see a pre-approval letter sometime, and I'm not saying I do this all the time, I just want to clarify that, but if it's New American Funding with Christina Boyette versus Rocket Mortgage with some guy in New Mexico, if I need to get something done, I can go to Christina's office and be like, hey, what's going on? But I'm not driving to New Mexico to talk to John, Riley from wherever. And then if you're in your loan already and you have an issue, heck, you might bump into Christina at the grocery store. So
that happens to me.
Right. So I'm saying,
and they're like, oh yeah, I need help with this, and I'm like, okay, I'm working on it.
And she'll work on it, on the spot, and then you don't have to go through waiting on the line for the next associate and all this stuff. Call Christina. If she can't if she can't talk to you, then she'll call you back and then get your problem resolved, and that's fantastic.
Yeah.
And I've had nothing but good transactions with New American Funding. So I'll tell you, and then Christina Boyette's been amazing. She's actually the one that got me the loan for my home. So, she's very great. And if I ever have any issues with any of my clients working with Christina, it's like that. She fixes it. So it's fantastic. But Christina, thank you for answering these 5 important questions that buyers are looking to have answered before they go into the market. And if you have any other questions, please put it in the comments down below. Then we'll bring it up to Christina next time. If you got any value from this video, do me a favor, like, share, subscribe. Send this to your friends that are looking to buy so they understand the home buying process from the actual lender that does this every day. But thank you guys for watching. I really appreciate it. I'll talk to you guys soon.
Thank you.